Well, good evening, everybody. Welcome to your session for tonight. It's great to see you all here, as always. If you can just let me know you can hear and see things okay, that will be fantastic. And, g'day, David. Thanks, Ian. Cheers. Hi, Mike. Good to see you here, buddy. Hey, Rich. G'day, Shane. Hi, Ross. I know, Gigi. I know. I'll keep myself occupied, mate. G'day, Adrian. I am well. Thank you very much. Ian, yes, thank you. Okay, right, let's get things kicked off. We've got a thanks, Andrew. Cheers, Chris. And Michael, good to see you here, mate. Okay, so, of course, got to put up this important message. We are looking at live markets, so please bear in mind, first of all, the opinions you hear tonight are those of me, not necessarily representative of Go Markets, but are for educational purposes only. Nothing that you see or hear should be taken as direct personal advice to take trading action. You need to make the choices to do that for yourself. And of course, as you do that, please remember that risk management is a critical part of everything that you do, and hence you should put the appropriate strategies in place to manage that well. Now, it's been a challenge to put this session together. I like a bit of a stretch, but I have to be honest, I thought at one stage I might have overcooked this, because what I tried to do is take what I would consider to be important and invaluable concepts and try and put them into a trading context, but also try and make the complex a little simpler and a little more digestible than perhaps is written about elsewhere. So it was a challenge, but I hope you're going to get something from it. And but what I would say straight from the get-go is that is just be patient with what you're hearing and see where it fits for you right now, but also where it might fit for you going forward into the future. But as always, we're going to start with our market watch and look at what's come across the news and how it's affecting sentiment. And of course, throughout the day, the US futures have been pretty flat tack. Nothing much going on to push markets either way. The ASX benefited from a lower than expected inflation number. We'll have a look at the economic data in a moment. And US futures are probably a little bit cautious based on the fact that we are in the midst of earnings season. There's a heap of earnings due to come out both before the bell in a couple of hours or so time, and of course after the bell we've got Apple and Facebook reporting. So big time. This is the busiest week of earnings season so far. To date, around about 85% have come in positive, so that's all good. We've also got some US trade balance figures coming later, which I don't think is going to impact markets much. So let's just have a look at some of the stuff behind all that. If we just quickly have a look at the futures, just to see where these are at. And you can see these haven't changed much all day, possibly slightly lower than they were earlier. We can see that really, apart from the S&P 500, they're all mildly negative as we wait for earnings to come across. Consequently, we've got the US dollar looking strong. We've got weakness across most of the currency pairs with the exception of the Kiwi. And we've got the yen under pressure and the Aussie under pressure. Now, the Australian dollar is obviously under pressure because of that low inflation number. And it came in dramatically lower than expected, which is possibly one of the reasons the futures have held up as well. But obviously, just to sort of whoops, it's on the initial slide. Oh no, shouldn't be. Can you see the economic calendar, guys? Chelsea did one last night. Let's get rid of those anyway. Yep, cool. Okay, but you can see there's the CPI data come out this morning, and it was dramatically below already low figures, but below consensus significantly, dropped from last month. So what this means is that, generally speaking, the relationship is, for those of you who are less experienced, essentially there are two things which drive interest rate decisions. There is inflation and there is jobs data. If inflation and jobs are going up, then central banks are more likely to tighten interest rates. And if they go down, central banks are more likely to drop interest rates. Now, there's no sign of any interest rate rise for the foreseeable future because of the pandemic. But what the market's trying to price in at the moment is long-term, when that situation is going to change. There's been lots of talk about increased inflation, particularly in light of high commodity prices. And so the fact that inflation numbers came in lower than expected means that it's likely to be even longer before the Reserve Bank has to move on raising interest rates. Now, where does that fit? Well, raising interest rates is usually bullish for the equity markets because there's a low debt servicing cost, and obviously a lot of companies operate on some degree of debt. So if you've got a loan, interest rates stay low for longer, then that's going to be transferred to the bottom line. For currency markets, however, it's the reverse. Currencies tend to move higher on the prospect of interest rate rises. So what we saw this morning was exactly what this number should have done, was a drop in the AUD and a move up in the ASX. Now, just having a look at that, because before that number came out, the ASX was looking fairly shabby. But if we look at maybe a 30-minute chart on the ASX, you can see how it sort of jumped up on that news. We look at the AUD. Just drag the AUD. Let's look at the AUD USD, and you can see on that news we had, so this is a 30-minute chart again. On that news, we had that drop. So we had a 30-pip drop in about 5 minutes. We've recovered to some degree on this, and in fact are a very interesting place. If we just look there, that 77.48 could be an interesting place upwards for you guys who trade very short term, possible 16 to 17 pips to the upside in that. But really, if we look at the daily chart, we're still trading within a range of about mid-range at the moment, between about 77.15 and 77.94. So not a massive amount between those two. If we look at the Aussie yen, that also suffered a little bit, though again is looking remarkably better. Just in the last little while or so, been trading in this range we were. So it seems to have brushed off. There again was that drop from this morning on the hourly chart. So we are looking at a level of 84.47 to sort of say, well, look, we've changed sentiment to the upside. So we look as though we're moving up to that. We're around about 9 pips off that at the moment, so worth possibly keeping an eye on. If we look at the indices overall, here's the US 500 daily, so we're bouncing along record highs on that and on the NASDAQ. Russell 2000 has outperformed a little bit of late. So just drag after underperforming for a couple of weeks there. You can see how over the last few days we've moved back up to key level at really 200-300 there. So, but we're flatlined today really on that. But that's been the outperforming index for the last week or so. Prior to that, it was the NASDAQ, which obviously is completely recovered from that 11% correction that was there in late Feb. Because of that equity strength, we are seeing a continued move downwards in the USD, although this 91 level looks important. We look as though we're trying to hold on to that. You can see how those bodies over the last couple of days have got smaller, the wicks have got longer, as we often expect at the end of a trend. So trying to find this bottom here, which may be dependent on what happens to equities at the moment. There's this relationship. If US equities go up, US dollar goes down. That's why, irrespective of what you're trading, it's really important to get a feel for the big picture stuff. Because knowing that now, then we can sort of say, well, look, if the US dollar is going down, what's going to benefit because of that? Well, usually it's the commodity-based currencies. So we saw the Kiwi do well. So let's have a quick look at New Zealand dollar, Kiwi. So keep New Zealand dollar, US dollar. And you can see on the daily chart, we're up testing, up towards testing resistance at around about 72.38. So that's around about 25 pips from where we are now on the daily chart. If we look at Kiwi Yen, that's looking stronger than the Aussie version. So we've already had the breakout for today of that 77.90 or 78 cents essentially. So we're up 50 pips from that, with a profit target potentially around about that 78, 79 level. If we break through that, then we're away again. So those of you like waves, 1, 2, 3, 4, we're on 5th wave, so it would make sort of sense if we moved up to there, but not much between where we are now and there. So 27 pips, so that's a very, very short-term trade for those of you who do that sort of thing. On the share CFD front, those of you who attended the those of you who've been kicking around have heard me wax lyrical about Macquarie over the last couple of weeks, particularly when we broke that 155 level. You can see we've had a nice spike up, and that was followed through today. Also, a couple to keep an eye on. So let's have a look at the Euro USD just for completeness. It's just flatlining. Okay. If we look at cryptos, look at a daily chart, you can see we've got a bounce off support after that fairly significant drop in Bitcoin. Ethereum's sort of slightly outperformed, but we may be getting stuck now around about this 54,275 level. So not a massive appetite to take this higher for right now. Also in Australia, we looked at a couple of others to keep an eye on, possibly for tomorrow morning. At this stage, obviously, ResMed look as though they're continuing on their upward trend. So that was one we pointed out. We do like Qantas if it breaks $5 again for a long-term trade. You can see how $5 is important. We've been banging on about this for ages, but we took advantage of it there and there. So this has been dampened down by vaccine concerns, vaccine availability, and of course some increased COVID incidents in places like India, etc. So patience is required for a medium-term trade in Qantas, perhaps. In the US, it's all about Apple and Facebook tonight, but we had UPS shoot through the stars yesterday, or Seek was the other one that we saw. For those who are trading share CFDs, that was another nice breakout today. Elsewhere, if we look at gold and silver, because of that US dollar strength today, we're seeing a bit of weakness in both of these. Both have tested key levels in the last week or so. Silver at 26.32. If we do break this, we're getting the 50, the 20, and the 10 getting pretty close to each other. So if we do break sort of 25.50, we could see a sell-off again. But we would expect, if equity markets come in strong, for this to hold up okay. But at this stage on gold, we look as though, again, we've failed to break 1800. Nice key round number. The market likes those. And we've just drifted down over the last few days. So looking quite temporarily bearish on gold. May see ourselves get back towards this 1750 support. Okay, so that's really a little bit of a market rock around, and just to fill you in on what's sort of happening. Now, as I said, here's the good news about expert traders. Consistently and overwhelmingly, all of the research that I looked at, all of the evidence shows that experts are always made, not born. So in a trading context, we talked, when we were talking accumulation strategies about 3 weeks ago, we need to look no further than the Turtles experiment we previously discussed. So that was an experiment set up that tested this nurture versus nature issue and came out categorically that you could be taught. What this suggests theoretically is that it is in the power of all of you here to become an expert trader eventually, okay? And in terms of what this is going to take, knowing that that is possible is not only access to optimum learning, which is obviously critical, but obviously the real difference is always going to be inside you. Now, I've talked this trader IQ concept for a few weeks now. It's how much you want it. You look at two teams playing in a football match, and you can always tell there's one team that wants, if one team wants it more than another team, the team that wants it more will always do better. Okay, so it's the same with you and your trading. If you really want this, work for it and put in place what's needed. There's no reason you can't continue to move towards that. It's not really a destination. It's really sort of part of just a way of being, I would suggest. But my aim tonight was to pick apart all of the research on what constitutes expertise or what constitutes mastery, and look at the common characteristics that that was there, both in a trading context and in a non-trading context, and try and bring them together for something that you can start to look at and start to work on. Now, if you want a book or two, there is, I remember reading a long time ago now, a book called Market Wizard, The Market Wizards by Jack Schwarzer, or something similar to that. Go and have a look at Market Wizards at some stage if you're still reading books, which of course many people aren't. But that gives some interesting insights into, essentially what he did was he interviewed top traders and looked to pick apart what they were doing, how they were thinking, what they were feeling about trading. So there's a good read for you at some stage, perhaps. And I think there's even a Market Wizards too. Just to go back, if we look at how trading results occur, we've talked about this before, but it's worth reiterating because it does have relevance here. We've obviously got what happens in the market on a constant basis, not necessarily just trade by trade. Then we've got to make some interpretation. We've got to apply some systems once we've created and developed them. And then, of course, we've got some decisions to make and action to take. And so this is all internal. Our response to whatever is happening in the market is in your control. That's the good news, of course. And ultimately, these will create results. The only thing we're not in control of is how prices move. So we've got to be on the ball in terms of constantly not only interpretation of one scenario, but on a constant basis. And on top of this map, if you like, in terms of how trading results occur, there are additional processes that we've previously made reference to. But I thought I would just sort of bring them together. And there's three that I think are worth thinking about. And again, don't fret if this appears to be complicated, okay? It really is just trying to give you an overview of some of the things that you're going to have to consider going forward. Okay, so if we look at these three things, moving towards this trading it can be, there's some things that those that will operate in a higher level do that perhaps those who wish they were don't do. Okay, the first of these is find your optimum learning processes. Now, everybody learns differently, and one of the challenges I have as a teacher on these sessions is to try and put things in a way which is digestible by most people. Okay, so you can sort of grasp it sufficient to then do some more work on it or do some thinking on it. But as you go forward, it makes sense to say, right, okay, that's my particular style of learning. I learn best at this time of day. I learn best by doing this and this. I learn best, but we talked, I think, on number 4 of the Intermediate Trader series we ran, we had a 2-part session on trading development. And we talked at some length on how we prioritize learning, how we organize it, the information that we've got, how you identify resources, including support. We've also had sessions before on not only finding the right coach, but also self-coaching, which is also a critical part of the process towards expertise. And there are various types of knowledge that are described in the educational literature, which is obviously where I see some of my expertise being. There's what's called explicit knowledge, which is your ABC stuff. And then there's what's called tacit knowledge. Now, this is something we're going to come back to later on, but tacit knowledge is really those things that become ingrained within us as truths, okay, as ways of, we know without even thinking about it, okay. People in medicine know, can know very quickly that faced with something, faced with a set of symptoms, can make diagnosis in a heartbeat. Don't even have to think about it. They know straight away. And it's the same with trading. You can look at a set of circumstances and say, well, look, that's what's happening now. But that takes a long time to develop, and we'll come on to that in a little while. Also, there is this idea of self-efficacy, which we talked about before, which is the belief that you can learn. And that comes over time. Again, with this, the more you learn, the more you recognize the ability that you do have to learn. So it's all of those are embraced in this optimum learning processes. The second thing that we may do a session on in the not too distant future is when we look at decisions, there's two components. There's an emotional component always and a thinking component, and it's a combination of these two which create ultimately a behavior in most cases. So this idea of metacognition is thinking about how you think. Okay, so we need to do some analysis on that. So pulling your decisions apart, looking at every part in its detail and then putting them back together again in a way that suits your individual processes. So my processes, my way of looking at markets, that process that I use when I look at the market, what section in terms of starting with the major indices, look at how that impacts on the US dollar, how that impacts subsequently on precious metals and other currency pairs, is my process. Now, it's great to give you that process, but ultimately you potentially and probably will find something that's better and more suited to you in terms of getting that market information quickly and to a level where you're making the speed at which you do it accelerates tremendously. Because what you do after a period of time of doing this, of picking things apart and putting them back together again for you as an individual trader, is you start to be able to filter things out which aren't important, which are just noise and not important in terms of results. And of course, keep those things which are. We talked before about something called a minimalization bias, where you don't look at enough information before you enter a trade. That there is a reverse bias as well, which is the opposite of that, where you just keep on looking for information, and don't end up making a decision. And that's really to do with confidence. Whereas minimalization bias and jumping before you should is to do with impatience. And perhaps a little bit of over self-confidence. The third of these things is to find your optimum consistent trading state. Now, this is not just per trade, per session, but beyond that. So looking for emotional control to a state of calm and extraordinary confidence. And this is, I've seen this described a few times, and I can sort of, it resonates with me a little bit in terms of individual results don't matter. Even a series of results don't matter so much anymore. They're merely feedback in terms of what's in how accurate your decision making was at a particular point in time. So they are really, I talked before about your results being a barometer of what you need to do next, what you're doing right, what you could be improving on. And really that is one of the primary purposes of looking at trading results. And so if you can get into that place where you don't get upset, you can get annoyed, of course, that you missed something that you've missed on several times before, that it's becoming a little bit of an unhealthy habit. I don't want you to feel happy that markets go down, that you're losing a position, because that's often a motivation for doing something about it. But neither should this occupy your sleeping hours as well as your waking ones. And so that state by which you care sufficiently to continue that hard work, that graft, the hard yards you need to put in, but don't get upset about what happens along that journey, is really one of the things that defines sort of higher level trading, or the higher level trader. So I wanted to put those three additional processes up, and we'll talk a little bit more about these as we already make reference to these as we go. So if we look at our 5 our 5 sort of key steps, if you like, or 5 clues about moving towards expertise. Great feedback. Thanks, Gigi. I'm glad it just sort of helps put you back on track, not only in terms of what to look at, but also in terms of where things are. That's you're very welcome, mate. It's an absolute and complete pleasure. So number 1 is exercising extreme patience. We're all very impatient to do this in a heartbeat, and it doesn't happen. Expertise, even advanced level training, doesn't happen quickly. The journey to truly superior performance is neither for the uncommitted nor for the impatient. Unfortunately, we can try, and by God, did I try. Okay, I pushed, tried to rush things. I said, oh no, they're saying 3 to 5 years before you master this training game. I'm not, I can do that in a year, I can do that in 6 months. But really, there's things that you can't rush. There's things that just come in front of you, that just come in front of you simply through the experiences you have. And I'll talk about experience in a moment. So you've got to be patient and be gentle with yourself in your progression through those levels of trading. The development of genuine expertise needs massive effort, work, focus, sacrifice, an honest and often painful self-assessment. And when we, again, looking at that development session, those development sessions that you ran, which it's a shame if you missed them, but we did the Trade IQ assessment, and as part of that, and it often isn't comfortable to look in the mirror and own that perhaps you're not quite as good as you thought you were. It'll never happen quickly, because what you need is a critical mass of experiences, and continually sort of drive yourself, or continually look for undertaking things which are beyond your current level of training competence and comfort. What we do is there's obviously an ideal set of things we need to do as traders, and I've banged on about them many times. Things like journaling, and things like time management, and etc. And but if we're in a place of, oh, we're okay with this, then the motivation to do something really requires a push to actually put those things into place. Also, markets operate very differently from time to time. And look, I can't remember trading in a pandemic before, not to this extent. So that's a completely set of new experiences, and will continue to be so. We didn't have a Trump-type president before, completely new experiences. So even though the market moves in patterns, even though some of the indicators we use are useful for telling changes in trend or continuations of trend, what the most critical part of any market is when markets change, okay, and how they change, what the response is, the velocity of that response, the in terms of how fast it happens, but also the severity of that response. And so when we put ourselves in a position where we're trading during these experiences, it's such invaluable learning, and it never ceases, okay? The other thing we can do is look for new experiences, absolutely go and deliberately seek them out through what's called deliberate trading practice. And this is putting yourself in a position deliberately where you're already in comfort zone, where you're outside your level of trading competence. So if you've been training a particular way for a long period of time, or let's put this into an EA context. Let's just see if any of our EA guys are here. Yes, there's a couple. Okay, so if you're used to putting an EA model together in a particular way, or a system in a particular way, if you're not trading EAs, try a different way of putting that system together. And put yourself in that position, because that's how you learn to put new systems together. We talked about that a couple of weeks ago when we're looking at considerations with a new system. But you take that and you try on a different system. It doesn't matter ultimately whether you end up trading or not. What's important is you put yourself in the position where you experience that. So when it is the right time to put a new system together, you're in the place to do that. There are no shortcuts to any of this sort of stuff, guys. That's really, really important to emphasize. It is incremental, will happen for different rates for different people, simply because people have different opportunities to do this. I'm in a position where I can look at markets for a lot of the time, and I've got sort of almost, I guess, 2 decades of looking at this. So, and I'm still learning shit. Okay, I'm still smashing myself around the head and wearing a stupid hat occasionally. So it's something that doesn't stop. It's something that's incremental, and it's because of those new experiences. But absolutely and completely, there are essential jobs to do at every level before you can move on to the next level. And that's, again, one of the reasons we sort of split up that trade IQ thing up into beginner, intermediate, and advanced. So you could start to identify what you should work on next and what you're committing to put in place. Because unless you put some of those things in place, you're never going to get there. Or it's the difference between it taking you 10 years and 5 years, okay? Or difference between moving to some level of confidence in a year versus 6 months, okay? It really is that important. And if that means that you throw some things out because they don't contribute to your trading, that's okay too. But in any case, exercising extreme patience, being gentle with yourself, whilst putting in the effort, work, focus, sacrifice, and self-assessment along the way, then that is sort of attribute number 1, if you like. Attribute number 2 is switch market lenses regularly. And I was reminded of this when we actually did that session last week, which actually, because I was actually teaching it, it made me obviously sort of take that step back and look, well, hey, what is actually happening now? What are the tailwinds going on? What are the headwinds going on beyond what's happening right now or over the next few days? Sometimes it's quite easy to get sucked in what's happening now, and you miss things that are going on in the bigger picture of the world, or the global, if you like, global market picture, global market sentiment, and what those key drivers and headwinds are not just now, but what they may be going forward in the next weeks. So I was reminded of that, and certainly there was a few comments about that when we did that session about how useful it is to take that step back. And when we look at this idea of market IQ and getting a feel for what's happening in the market, where the risks and opportunities may be, we're looking to put ourselves in the position where we have the ability to ultimately create systems that are responsive to changing market conditions, including that alteration of risk level. There is undoubtedly periods in markets where there's one strategy which is better than another strategy, or one instrument better than another instrument. Share CFDs have been fantastic to trade the back end of March, but were tough yards at the beginning of March, for example. So, and early April were pretty good as well. So there are periods of time when different market circumstances mean that there are different switches you need to switch on and different switches you need to switch off or reduce. And one of the things that if you get to this level, then it is how you potentially optimize returns. And that's something that's in place whether you're an advanced trader level and above. And we've given the example before of, well, look, if you come up with if you come up with a simple gradient scale about how you feel about how risky the market is right now, you could position size accordingly. And not only must all of the above be in place, but also will only be in place well if you change your view. So the initial point I was trying to make is there's merit in looking at the minute detail, a normal view, if you like, and stepping back for that wider global picture. look, there's if you stand on a chair, you get a completely different perspective about your immediate environment than if you're sitting down on that chair. Just because you're seeing different things, you're experiencing a slightly wider focus. You're taking in more things that are around you. Whereas if you're sitting down, you see some things a little more close up. And so why would the markets be any different to that? And so there is merit from sort of saying to yourself or planning in perhaps that time, maybe once a month, when you just sort of take that step back, do exactly what I did last week. Because last week wasn't just about me giving information, it was to show you a process of taking that step back and looking at the bigger picture. So you can make decisions in the weeks and quarters ahead about what you might do, what you need to, what your investment approaches may be or trading approaches may be. Balcony versus the dance floor view, great analogy, Wayne, love it. That's exactly it. That's exactly it. So to do this, the best way to do this is to start doing this. There's no reason why, having looked at how we do this market watch on this session and how we did last week, you've got two different views going on there about what's going on. Although obviously some of the information crosses over, or maybe at different stages during that information's maturity. Have a look back at those and actually plan in, right, okay, on a day-to-day basis, I'm going to have the normal view. At least once a month, I'm going to look at the monthly big picture. And the minute view is when you start to sort of really drill down on what's happening almost on a candle by candle basis. And this is really useful in terms of detecting whether there may be a change in trend coming. And I might talk about that at a future session, perhaps, because I've been giving it some major thought. Attribute number 3 is really become more time efficient in your decision making and action. There is no doubt that as you develop confidence in what you're doing, experts, advanced traders perform problem solving, make decisions far more quickly and more efficiently than less advanced traders. But obviously the key thing here is that you're doing that while still maintaining what's called rigor. Okay, when we're talking research, we're talking about when we talk rigor in a research context, then we're talking about doing all the right things to make sure that you're still looking at everything. So it's that balance of efficiency versus effectiveness. So you want to become more efficient without effectiveness being changed. And that's what expert or advanced traders do, is they become very quick at being able to make that assessment of where the market is, about being able to pick when trends are changing, about saying, well, look, this is not happening. Let's switch this off for right now. Let's go and not essentially back to the drawing board, but let's have a relook at this and just decide whether this is good for me or not good for me in terms of what I'm trying to achieve with my trading. Over time, as trading expertise builds and moving through processes, process steps accelerates, you get more and more able to put new things in place at a quicker velocity as well, with minimum thinking. So remember, when we talked about a couple of weeks ago, I sort of give you a how-to. We talked about the how-to in terms of it's really important that when you look at systems, the first stage is to work out a how-to in terms of how to add a new indicator or add a new strategy or review your journal information or whatever it is. If you have a how-to, that's the first stage in making that happen, and that's the learning component. That's what obviously one of the things that I'm trying to do with this group is give you some how-to, some roadmaps in order to get things done. That was the idea behind the Trade IQ assessment that a lot of you did, is it's almost a roadmap to take you from being a beginner to an advanced trader. A lot of these how-tos are all what I would do working on a one-on-one basis with people in terms of my idea of being an educator is and where I get the real kick is to use the old cliched analogy, I teach them to fish rather than giving them fish. so they can feed for a lifetime. And it's exactly the same deal here. If I teach somebody how to add an indicator, that process, then they are able to do that. And as they do that more and more, they have to think about it less and less and spend less and less time doing it. You can see things almost automatically. And this, I'm very, very cautious about talking about this because there are significant dangers with this. But that if we look, and I've done some work on this before in a different context, but one of the, if you like, pinnacle points of what determines expertise is this tacit knowledge that I talked about before, that you now know without even registering that you're taking it on board and applying it in a situation. So it's ingrained with you as a trader. Look, those of you who are experts in different fields will possibly be able to relate to this. And there's things that you do. It's all unconscious. You're just doing it without thinking because you're so used to doing it. You've got so much experience. You've got so much knowledge that is part of you in whatever field that you're operating in, that it just happens. And this happens in every area of expertise, in every field on the planet. So there's no reason why there isn't that in trading. And this is why, or this is one of the reasons why, when people go and see an expert or go and hear an expert talk and they say, hey, look, go trade this system, it's great. And they go trade this system and they don't get the results that this expert got, there's something missing. There's something that is very, very difficult to articulate in words and processes, because it's almost unconscious. So if we go to the, let's take two guys I respect phenomenally well in the magnetic trading guys. They trade and have been trading for many, many years and trade phenomenally well. And they do an extraordinarily good job of giving people that information. But there are many people who don't perhaps succeed as well as others. And it's because that maybe they don't ask the right questions, or maybe they don't watch hard enough. But there's some things going on with anybody who's an expert like Mark or Cameron are that's really difficult to articulate. And it is this tacit knowledge and this trading intuition almost. As I said, I'm reluctant to talk about this anymore because there are massive. I remember this guy. Grief. I remember this guy. I sort of started to coach, and it was my third session with him. And he'd done very well today. He got very really passionate, really enthusiastic about making this happen for him. And he put together a little training plan. And then I went and saw him, and I said, well, look, how are you doing? He says, well, look, I've sort of lost 40%, but it's okay in the last week of my account. But it's okay because I've put another 10 grand in now, and I can now feel the market. I can now tell when it's going to change. I can tell when it moves, and I'm thinking. So anybody who starts to talk about feeling the market, or if you start telling yourself that, then you're in a very, very dangerous place, particularly after 3 weeks of starting. So that's why my reluctance is to talk about trading intuition, but it is undoubtedly down the line, years down the line, it is undoubtedly something that clicks in, and maybe even months down the line, if you've got the time to put a lot of work in, you might start to have some things in place which just click. But that tacit knowledge always starts with some explicit knowledge. Always starts with going back to the basics, learning how it works, learning how to put things in place, learning what you've got to do, learning all of that ABC stuff. Without that, you don't get to a stage. Without that explicit knowledge, you don't get to a stage of tacit knowledge. So you can't sort of skip steps with this. So in terms of your start point with this, well, really start to consider trading time. And whenever a market changes, what I would do is, rather than just say, hey, look, the market's changed, bugger, I was long a few positions and now they're and now they're all in negative territory, but I have to close them down but it's okay because it's within, I've risk managed accordingly, and so my losses are kept small as I should do. Now that's all very well and good, but you're missing out on a massive learning opportunity there. So every time you see a change in market, and particularly a significant change in market, or even when you see a market that isn't doing anything, get in deep. This is where you need that minute lens I talked about in the last one. Get in deep, look at the anatomy of what's happened, look at the events that have created that. And what that will do is start to create a picture for you, how you look at the markets, how you interact with the markets, that may make this something that you can identify that much quicker. So if ever you see that that sort of event, that sort of market event, then get in there with the magnifying glass and make copious notes on it. Okay, this goes beyond your standard journaling, and is going to serve you very well going forward. Just looking through comments and questions. Yeah, Ross, fantastic example of tacit knowledge is driving a car. You drive a car, and this is where there's something called creative thinking and critical thinking, and then there are things called heuristics, which is this tacit knowledge, where things are almost automatic. So when you're driving down the road, you don't consciously think, well, there's that thing going on that side of the road, this thing going on this side of the road. It just happens automatically. You're not registering it consciously. It's all happening subconscious. A subconscious state of being, that you're taking all of this information in and ultimately, hopefully, driving safely. But you drive yourself nuts if you were driving down the road and you see someone sort of walking down the pavement. You're thinking, oh, look, I wonder whether they're actually going to decide to cross the road or not going to cross the road. Or is there a bit of wind there? They're carrying an umbrella. Is that wind going to is there going to be a gust? It's going to blow them into the side of the road there, etc., etc. Okay, so driving is a fantastic analogy. Thanks, Ross, for that. That's great. It demonstrates it really, really well. And ultimately, you can get that. So ultimately, that can become part of your trading. Not all of it, but part of it. Complete trading honesty and awareness. I've talked before about looking in the mirror and seeing the real you as a trader. What we have a tendency to do as people is we protect ourselves from truths which are inconvenient, and we're often or sometimes blind to our own mistakes, or we what I call blame shift, in terms of refusing to accept responsibility for what's happening in your trading, whereas the actual reality is you're in control of everything apart from how a price moves. And the reasons for this are obvious, in that there is a protective function to us as people, in that if we were to be hypercritical and look and beat ourselves up about every potential flaw, it wouldn't be long before we're seeing a psychologist, if not psychiatrist, with a major anxiety state and depression. And often that is, this is what actually happens medically to those who do find themselves in a place where they're not coping, is that they are focusing, or their focus changes, their focus changes to seeing everything as evidence of them not being worthy. So there is a function of this, but in a trading context, although again, we want to keep some level of trading self-esteem, because that self-efficacy and believing we can actually do something is an important part of our development, but neither do we want to distort our perception of our true trading reality, warts and all, in terms of how you are now as a trader. Because really, at an advanced level, we really need to start to move to become part of the solution, to become a better trader rather than part of the problem. There are going to be many trading challenges you face. Some of them you faced before, some of them that will be new. But really, we need to be honest about how we manage the particular situation, not only historically, but how we're managing it as we're doing it. So trading experts are capable of seeing the truth. Yeah, consciously incompetent, and unconsciously competent are, yeah, that model. Wayne, good point in bringing up. That model's used quite significantly, and that unconscious competence, it's not really very well defined by many people out there, but that's what we're sort of aiming for. But trading experts are capable of seeing the truth, including not just what they're doing, but the potential consequences of the control that they have. So A, they acknowledge they've got control, and B, they acknowledge the consequences of particular trading actions. And they're completely objective about what created results and correct themselves accordingly. So they do adopt this consistent self-analysis of what they're doing, of what they're good at, of what they're not good at, which biases, we've talked cognitive biases before, may be present, and indeed may develop strategies that accommodate these. So rather than sort of saying, well, look, that's just who I, or that's who I am, and I need to continue to work on this and bash and bash and bash against it, even though it's been in place for 40 years. Maybe in the interim, then you find a strategy that actually suits that, as well as courses working on those things directly. And finally, the number 5, a key one. There were about, I think there were about 11 that I sort of identified and tried to sort of try and bring them down into a manageable 5. I've termed this excellence in acquisition and application of new information into your trading. So it goes back to that knowledge thing again, is that we can choose and should strive to put ourselves in a position where exposed to new knowledge in its broadest sense, and that's not only new knowledge in terms of new learning like on these sessions, but also new market experiences. And that includes perhaps looking at other vehicles as well as different timeframes, as well as different strategies, because that's where we find our groove. That's where we find what suits us as an individual trader. And a constant challenge, and one that the advanced and above traders seem to be able to manage very well, is actually doing something with that information so it becomes learning and ultimately can be applied in the reality of that trading. So it's that application again. So that's one of the things I sort of mentioned or referenced before. A good experience is only a learning experience if you actually take the time to look at that experience in some detail. Otherwise, it's just something that goes. Okay. So as well as sort of doing the seeking out the experiences, the application is critical. So even after a session like this, you've got to ask the questions, well, look, how relevant is this? Is this going to be important? If it's not important now, is it going to be important to my trading going forward? How can I apply this consistently in my trading? Take the steps to make sure that that information isn't lost. Now, I challenge you, if any of you have been here for the last 3 weeks, think of a session that you attended 3 weeks ago. What can you remember from that session? And compare that to what should you remember from that session, sorry. Are you taking notes on webinars or making, it's really simple. At the end of a webinar like this, maybe list 3 things that you've got from that webinar and 1 thing that you could potentially action. Take about 5 minutes while the information is still fresh. Otherwise, you're just gonna have to watch an hour. You think, oh, that was a good session. Maybe I better go and have a look back at that and see what I can do with it in my trading. I'm sure there's something I can do with that. So I'll invest another hour in watching the whole session, whereas you could have wrote those things down that you could apply in your trading accordingly. Okay. Now, again, one of the dangers of becoming an experienced trader is that you start to close. you start to close your mind and your learning to new potential ideas and ways of thinking about things. So that inherent openness to learning is, again, a characteristic of very advanced or expert traders, in that everything that comes their way, they're asking that question. Well, look, could this be something I haven't thought of before? Is it something that could be applicable to me? And if it's not, that's okay. But remain open to that. I remember years ago, I was asked to do a session to some property investors on options trading. And I was extolling the virtue at that time, because they were more liquid, of ASX options as well as US stock options. And this guy stood up and he started bawling at me about how US options are the only options to trade, etc., etc. And he was completely shut off to something new. And I mean, look, I managed him. Obviously, threw something hard at him and moved on. At least in my mind, I threw something hard at him. But I couldn't help but feel that he'd closed himself off to a potentially great opportunity of trading a different market using exactly the same strategies. And so, yeah, that openness to learning, openness to new ideas is a danger you need to be aware of once you've been trading a little while. Because we sort of start to go, I'm doing better than that. But really ask yourself every time, can I put this into practice in my trading? Has it any relevance? Will it potentially, if I look at it, can it potentially make things better? Does it fill a gap? All of that is good. Patience is tough, Gigi, absolutely. I'm dreadful at it, okay? Absolutely dreadful at it. Okay, so those are my 5 key signs. We've taken up an hour. I hope that's been at least giving you some stuff to think about. But consider each of those 5 signs of the expert trader. What can you do now to begin to move towards these? Is it starting to make notes after a webinar? Is it starting to look at what happens and make some notes when a market changes? Is it to put in place or look closely at what you do with your trading time, so you've got that as a benchmark to determine process later? Is it to work on a couple of those processes, some of those how-tos, just to get more and more familiar with them? What is it for you that's going to make the difference and take you towards that place? As I said, it need not necessarily be a destination. It's a way of being. Expertise is a way of being, not a destination. So what I hope I've done is just giving you some stuff to think about, to consider, and something that you can put forward in your trading. And of course, if you need to refresh, then request a video. Just drop me a line. I'm glad you like the quote, Stuart. You're very welcome. Yes, it is, Peter. Just drop me a line. It's mike.smith gomarkets.com, and I'll make sure you get access to the recording. That's really kind. I might have threw something hard at him. Yep, I've been there a few times. Peter, I'm glad you've got a lot from it. Alyssa, you're always welcome. Fantastic. Good. Creating a lot to ponder is what it's about. And of course, knowing you, Rachel, you're going to change that pondering into some action. Andrew, you're welcome. Yes, Ross, more work for you to do. That's what teachers do, mate. Okay. Awesome. Well, as I said, it's completely different session to what I've to what you'll probably hear anywhere else. But I hope it's been useful. It's been a pleasure. I really appreciate the comments, the really nice feedback that you've given through the session, and as always, your participation's been awesome. Yeah, That's very cool. Look, trade safe, guys. It's going to be an interesting few days with the earnings coming out. And of course, you're welcome, Ian. Drop me a line, David. It's all good. I'm going to have that glass of wine absolutely now, Adrian, and you're very welcome, buddy. Michael, fantastic. Okay, guys, take care of yourselves. We'll see you again very soon. Actually, if you're around and about tomorrow morning, you'll see me at the session tomorrow morning. Let me just, I'll better give you the link just in case you haven't got it. But I think most of you rock along to that anyway. Should have a big crowd tomorrow for our live micro update session at lunchtime. Again, if you come into that, just watch the process. The process, I'm just putting that link in chat now. The process is as important as the information. You take that, you can find your own groove. I know a few of you are doing that already, and I'm really so impressed by what you've achieved so far. So keep up the good work with that. It is good stuff to have on board. Okay, guys, well, take care of yourselves. Catch you again very soon. My name is Mike Smith. It's been a pleasure, privilege, as always. Bye-bye for now.